Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for September 25th, 2018. So yesterday we had kind of a odd bit of price action going on here. We saw the diamonds pulling back pretty sharply, losing some substantial ground, and also dipping below this all-time high support area. And then, while at the same time that was going on, we had the NASDAQ, the Qs, showing particular strength, I should say, particular strength bouncing off of that 50-day moving average, showing all kinds of strength after a substantial gap down yesterday morning, just as if the bulls refused to let anything slip to the downside. So a couple of things that it's just a little bit, just a little bit odd where we see two of the major indexes being completely out of sync that way. Now, consequently, the Dow pretty much closed the day almost at its low, but this morning we're seeing the futures pointing to a gap up open of some significance of right now about 80 points in the Dow gapping up. So essentially we're removing basically half or better than half of yesterday's sell-off at the open here in the Dow. So the Dow is holding above its trend, and that will, it looks like at the open we should recover that support area. But I do have a little bit of question on this, remembering that we do have an FOMC meeting starting today, and the uncertainty of an FOMC meeting normally creates a situation in the market where the market pauses. There's light, choppy price action ahead of that going on. So it seems odd to me that we are ignoring the FOMC meeting, and we're going to get this big gap up this morning. So watch this closely. As I always am suspicious of gap up opens at or near price highs. And the reason is because they can turn into those pop and drop type patterns where we gap up in the morning. That's kind of the highest price of the day, and we find sellers there, and it sells off the rest of the day. So be real careful not to chase into this. I'm certainly not predicting in any way, shape, or form that is going to occur, but I am suspicious of a gap up open ahead of an FOMC meeting where we're pretty much assured we're going to get a interest rate increase. And then the big unknown is the FOMC forecasts that come out also, which could suggest, additional interest rate increases coming, adding more rate increases this year and next year, which would definitely be a concern probably for the market. So we'll want to watch this closely and be really, really careful here about how we trade it. Be really careful not to chase into this market. Watch that closely. Make sure it proves that there are buyers showing up after the open. Now, certainly the SPY yesterday, SPY pulled back and really kind of just decided to chop yesterday, but it did hold above support levels, and it's held above its trend, so that's bullish. There's nothing bearish in these charts at all, just a little bit of concern going on here. And this morning you can see SPY gapping to an open today higher. The Qs themselves very strong yesterday, holding that support area that we talked about yesterday, holding on to this area here. But let's keep in mind we're still within this price wedge here on the Qs, and a gap up here into this resistance we have to pay attention to. We remember we failed here twice, so a gap up into there has to be watched pretty closely. But right now the market doesn't show any particular signs of major stress or concern, which ahead of the FOMC also gives me that worry. IWM had a good day yesterday where we gapped down and broke down below this key level, this breakout level. But what we ended up doing is testing this trend line. And also that happens to be right there at the 50-day moving average. If we take a quick look, you can see we responded bullishly to that 50-day moving average, buyers stepping in there. So a really good move here to hold on in IWM. And this morning, it looks like it could gap right up to or just above that breakout level. So watch that closely and be careful. Let's take a look at the VIX. The VIX yesterday showed some concern. For the majority of the day, we were rallying up on the VIX, showing that concern, a little bit of stress there in the market, a little bit of fear coming back in, bouncing off of that level of support. This morning, I'm guessing with the gap up open, that's going to come right back down. So watch that carefully. And with the FOMC meeting and us trying to put on this brave face this morning, I worry just a little bit about complacency, that we're getting a little bit complacent in this move, and we're just trying to ignore everything. We're ignoring tariffs. We're ignoring interest rate increases, a lot of things like that going on. So I'm worried about a little bit of complacency here. It's not terrible, but just something we want to be watchful of, and just not running blindly into the market or chasing into the market. Let's be wise on how we trade this and be thoughtful about the overall market condition and where we are. Let's take a look at T21. 22. T21-22, that 4-week new high, new low ratio. I look at that on just a simple line chart, and you can see we moved down substantially yesterday with that selling, but we were still a long ways away from that place where we would be worried or suspecting that bullish reversal zone back up. So we've got room to the downside, and we've certainly got plenty of room to the upside before we reach any of those reversal zones. So still not getting those reversal signals here in T21-22, but it just shows us that we have plenty of room that we could go either direction. So we want to be watchful of that. Let's take a look at our economic calendar here today. Economic calendar has got quite a little bit going on it today, with first obviously the FOMC meeting. We've got the Red Book here at 8:55, but the two main items today to kind of pay attention to would be the Case-Shiller number, which is expected to just ever so slightly tick up, and the year-on-year number kind of remain flat, and consumer confidence is expected to slip back just a tiny little bit after its big move up last month. So watch those closely. Those could potentially move the market around, and we'll have to pay attention to that. So with that, everyone, on the earnings calendar, we have several companies reporting earnings this morning. JBL has reported this morning, and looks like I think it's reported this morning. Looks like it's looking relatively bullish after that report this morning. We also have a report from FDS this morning, and looks like they have missed substantially in that report. Now this afternoon, take a look for KBH. KBH is reporting earnings after the close today, as well as Nike, the biggest name of the day, that will be reporting. So keep an eye on that Nike potential report. Nike's been on an unbelievable run here, and it'd be kind of challenging to pick up a trade here anticipating earnings where it is currently. So watch that closely. Let's take a last quick look here. Market is gapping up this morning, and once again, I want to just echo just a little bit of caution about chasing into a gap up open and watching that closely. And what I mean by that is, even if you take a look at an intraday chart, what we want to make sure is that after that gap up open, we closed here, we open up here, that we actually see real buyers coming in to support that new price to push it up. What can often happen with a gap up open, particularly around market highs, is we gap up, a lot of folks chase into that, we immediately get a sell-off. And that sell-off has to hold someplace. If that sell-off holds a support level or a place where buyers actually come in and pick that up, we can get that little consolidating period here, and then we see buyers pick it back up and move that back higher. If they don't come in, then we get that follow-through sell-off that can occur and actually create new lows. So we want to watch that. We don't want to chase into that gap up open near these highs. And also keep in mind that if you buy trades today, it's not uncommon for the market to become pretty light and choppy ahead of an FOMC announcement. So if we buy today, we could end up in stocks that just kind of stall today, and then we're kind of left to the wild price action of that FOMC meeting to see how they're going to turn out. So think about that and plan your risk carefully today. Everyone, I want to wish you all a fantastic day. And if this is the first time you've seen these videos, please do me a favor. Click that subscribe button on YouTube, follow me button on Facebook, click those thumbs up buttons, and drop a comment. I always appreciate those. And always, 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 everyone, feel free to share this video with any friends and family. Take care of yourselves. Have an awesome day. I wish you all great profits. We'll talk to you all bright and early Wednesday morning. Have a good one, everyone.